Hey, what's going on, everybody? I just wanted to basically come on here and show a couple of patterns that have really changed the game for me in the last year of trading. I feel like they're really simple patterns to learn for like a new beginner trader. You don't really need the most amount of money to trade these. With small caps in general, people think you need a lot of money. You really don't. I feel like the more money you either start out with, you probably will lose anyways. I've turned a $2,500 account to over 10 grand with these patterns. Now, of course, I've took some money and funded a larger account because I'm really trying to push my trading and size up. But I did start with that in that realm while learning this patterns and these patterns and really developing better as a trader. I've been trading for years. Um, Long story about my trading, but I've been able to make back basically everything I lost last year, and I'm on track to have a really good year this year. So I'm very happy about that and excited. But these are just two basic patterns that I'm going to go ahead and show you all, and hopefully you guys can learn something from it. If you have any suggestions or anything, you guys want to say, drop them in the comments below. But we're going to go ahead and get right into it. One of these patterns I want to go ahead and mention that it is an after hours pattern, so the risk you can lose money, like a lot of it if you're not safe. If you don't know how to cut a loss, number one, if you haven't learned how to cut a loss, you really shouldn't be trading with big size at all. If you don't have that, you just shouldn't be trading with big size at all because you're just gonna lose all your money. And I feel like that's with all aspects of trading. If you don't know how to be wrong, that's one thing that has changed the game for me is learning how to be wrong and reminding myself that it's okay to be wrong. I still get in modes to where I don't want to cut a loss, but I always end up cutting it. Thank God. I just always do, and I'm so happy. It hasn't always been like that for me, but I've in the past really 6 months to longer, I've that's what's changed my trading is cutting losses and being wrong. Of course, developing more edge because if you have no edge, you're gonna make no money anyways. But once you do have an edge, you can have an edge, but you just are still unprofitable because you're giving up too much money because you don't know how to cut a loss and be wrong. It's okay to be wrong. It's not okay to stay wrong. I don't know whose quote that was, but it's a really good one. I love it. I always tell myself that. Anyways, let's go ahead and get into it. We're gonna start with there's a ton of trades here, but let's just go to the most recent. Um, One of them, I think MYNA was a decent one. I hope you guys can all see this because I know sometimes when I'm recording, yeah, I think you guys can see this. So, anyways, we'll go. These are my entries you can see. You can see the entries, kind of starter here, added more here as we started to hold. Risk initially is going to be down here. But then once we creep back up, I'm moving my risk up. I wish I would have added a little bit more. I actually was trying to. I only got 10,000 shares on this play. I really wanted 15 or 20, but I was trying to add. I wasn't getting filled. The spreads were a little wide, so that was another reason I wasn't too like jumpy to get on. And I also had another big trade at the time going on, a way bigger trade that I ended up actually. I think I made $100 on. We'll get into that, but anyways, uh, you can see just spike up and base basically. You got to remember the one thing about this pattern is I don't like stocks that you can see this stock went from 27 to 45. So 100% would actually be 27 to just under 60. So we didn't run near 100%. I think we were only up at this point 30 something percent of the time. I can't remember. But that's just the key to this. You don't want to play these stocks if they have already ran 70 or 100%. You just want to avoid. You want to go with the ones that maybe spike out and top out at 50% and then pull in. Those are like the best. Like 50, 60% is fine, but you really want them to not go much higher than that and then pull in and ideally to have a gap to fill above. Let's do this. Let's use Thinkorswim because the charts are just a lot cleaner. We can go to the daily. And I think it was, what day was this? it was this day, which was 211. Let's look at 211 just to see what I've seen. This is 27, 210. So this is what the chart looks like on 211. You can see the volume, number one, like it just stands out. You know, there was volume this day, barely any volume this day. Really, the most volume we've had come into the stock since it went on this last little bit of a run. There was a gap that didn't get filled right here at 67. And there was another gap, yeah, right here at 58. So I was looking at this 58 gap. We had filled this gap at 44, and we were in this one right here at 37. So we were kind of using this area as a form of support. And oop, what am I doing here? Come on, let's go 15 days, 1 minute, right? Make it easy. I like to use the 1 minute chart after hours. I feel like it just explains a better story. So we get that initial push up. I don't like to get caught up trading this on any of the tickers because I just get chopped around in all this. So what I like to do, I call it letting the dust settle. So I'll let it run. If it doesn't go run 100% or more, 70%, and it gives the opportunity to pull back, this is kind of a valid trade, like that first pull off VWAP. You can kind of start right here. And if it holds for the next hour or two, you could start to add more and build into a trade as it makes higher lows. Sometimes I'll depending on what the market is like, how hot the market is. Are we seeing after hours runners? Is the price range in play? Like there's a lot of factors that go into it. But there's just a lot of factors that go into it, whether I'm going to play this first pull right here. Is the float low enough? Maybe is there news? Like how close is the gap? Do I think like if it's a really good looking play, then I always try to play that first pull into VWAP and just put on at least a starter or something because I want to have very wide risk. In my opinion, if it pulls in down here, I mean your real risk has to be like wide. So you want to have a small starter because you can't use these lows as risk. You'll just get chopped out. So your real risk is like down here really because I feel like if the stock would come all the way back down there, the setup would be invalid anyways. So that's number one. Just put on a small starter with a wide stop and wait till the trade's invalidated. And then if it can hold up into after hours, if it holds up for a couple hours and then starts to form a base, another base, that's when you can start to like just start to add. And the longer it holds, the more I like to add. So I might add here, I might add here, and then you know if it just keeps holding, I want to keep adding, and then I want to move my risk up. Uh, so on TraderView, you can see where I was adding. Where did I? So I added here and I added more there, and I was trying to add more in this little ramp in here. I just couldn't get filled. I was thinking it was going to pull right back down and test one more time, but it ended up, you know, just going right up to the highs and the closing strong. And then the whole idea behind this is to sell into a morning spike. Now sometimes these plays can get super volatile, so you don't want to get shaken out. My stop will be so if it initially when I'm getting in here, my stop is going to now be down here under this because if it breaks under here, it's probably invalidated. It's not going to work. The best ones don't do that. So anyways, after I entered here and it moved up in the close, now my stop is almost. I mean, in reality, I could have a break-even stop. My average is like 40, but I just rather it doesn't matter to me. I'm just gonna keep my stop down here, below this like after hours low, and at the morning you can see it's shot down. But trust me, guys, this happened within a split second. You wouldn't even have seen it. I was sitting there watching it. It happened so quick. You wouldn't even have been able to react to this wick down, and then it just shot right up. And that's what a lot of them do. They may have a little wick, but they just shoot right up. That's not always the case. When they do start to come down, you have to cut your loss. You have to really get out. That's one thing. But when you get more experience in the setup, you'll realize like when they are you'll be able to just read the tape and read the flow basically. But but I didn't sell on this, or actually, yeah, I did. I think I took half off into 50. I held through this little bit of a pull, and then I sold more into 54, and then I cut the rest um, as it broke back under 50 because I wasn't digging it anymore. I wanted to take my $1,000 and be done with it. I had a good risk to reward on the trade. It did end up going and filling the gap later. That's why I love to place gap fills because sooner or later they fill, but it's just about the timing. Uh, but anyways, this is a little bit of an example here. You guys can just see this is the idea behind the setup. Really the best idea, the whole key to the setup is a good daily chart, and a good daily chart really needs gaps, and I love to have like that first footprint of volume on that daily chart. That's a telltale sign that they're going to gap the thing. Okay, so we can move to, that's one example. This is at after hours, 4 a.m. gapper. Let's go to this next setup, which is more of a afternoon breakout play. Uh, Here's one recently that this setup really hasn't been that much in play lately. I've been trying it and I've been losing on it. I've been losing really small on it, but it just really hasn't been that much. Oh man, I don't got no water. It ain't been that much in play, so I haven't really been looking for it too much. Maybe when the market starts to trend back, really, it's going through the highs right now, and I think that's why we've seen that play happen on SCPX. But sometimes when the market is recovering from like a couple of days down and it's really having a good strong rally, I'll see like these small tech stocks do this pattern, and basically this is the pattern. It's like let me pull it up on Thinkorswim, but you guys can see my entries uh here at 29 or 28, I think. Let me look where I bought this thing. 29, 29, yeah, I was getting filled 29s. Um and I wanted to get more on this play, but I didn't get my fills. I think I only got, well, it'll tell me right here actually. Yes, I only had, I think, 19,000 shares. I remember it was not the most. I wanted like 30 or 40. It was kind of depressing because it ended up going right straight up. But anyways, SCPX, let's look at it. SCPX. Okay, so again, I like to use the 1 minute chart a lot just because I feel like it tells a really good story um on what's going on. I use all different time frames. So I like to come down to the 1 minute chart and I just like to look. I'm just looking. I see the initial spike. I see it come down and it's like a beach ball underwater. Every time they're trying to push it down underwater, guess what it's doing? Boop, pops right up, pops right up, pops right up. And then eventually the beach ball is just gonna blow. And that's what happens. I seen this one a little bit late because I own a business, so I'm usually working during the day, and how I developed these strategies was around my schedule, just afternoons. I got in the afternoon, and I think I seen it somewhere around here. I don't know where I seen it, but this is where I was adding, and it worked pretty quick. It was like an easy 900 bucks, but with very pretty like minimal risk. I mean, my stop on this play was, below this little below this these lows down here. And whenever I come up with a stop, that's when I typically like to look at the bigger time frame charts because it gives me a little bit cleaner. So I think my stop was like under 27. Like if it really got under 27, I was going to start to have to cut it. So I had like a 2 cent stop. I do like to have a little bit wider stops because I don't like to get stopped out. Uh, I like to have my stops at a place where I truly feel the trade is invalidated. But this one, we popped up. That's what will typically happen is just like at 3 o'clock or into 3:30, it just basically breaks out and fills the gap. We had a gap to 37. We didn't quite get there. I sold some at 33, 34, and 35. That's where I was totally out at 35. I think it was a piece at let's look. See my sells on this. Okay, so I sold 5,033, 5,032.74, 4,034.72, and then you could see 35, and then, but It's just a really quick, it's a simple pattern, and how this looks on the daily is very important. The daily is very important to both of these trade setups. Um, let's look. I think it was this day. Yeah, I think it was this day right here. So what I was seeing was it was let me look. Yeah, so I seen this gap. You see this gap right here at 37 that hadn't been filled, and we were trading down here at like 28, 29, and we were trading the most volume the stock has traded in a while since this other previous green day where it spiked big. Um, and that's what I seen, and it was just holding sideways. So just imagine this candle basically cut in a quarter or cut in half, and that's what it will typically look like. And the key telltale sign is the volume. I don't want to see just because the daily looks like that, but there's no, I can't even see the volume blimp on the chart. It's not what I'm looking for. I want to see the volume. Also, I use like relative volume, so you can see right here on my scanner. Like, look at the relative volume. How much volume is it trading relative to the other days? When it's trading a lot more volume than the other days, it's creating a bullish pattern intraday. There's a gap to fill on the daily. I mean, these are all telltale signs that it's probably gonna, push a little bit higher, some aspect of that. And you can see we did end up filling that gap after hours. Gaps on these plays tend to always get filled. That's why I play them, and that's why I love them. I mean, I focus on them, but really has changed my trading. Focus on gaps on these small plays. Don't be scared of something that isn't trading the most volume either. We're not trade unless you're trading with a ton of money. You can be nimble in and out of these plays, no problem. And the key is some of my best trades have came from getting in plays before the volume comes in. That's what I want to focus on every day I go into the market. I don't want to be buying the stocks that are trading the most volume. That's not my strategy. I don't have edge there. They're already trading the most amount of volume on the day. They're already gapping over 100%. Everybody's made money on the long side. So guess what? That's why the shorts win. Not always. I'm always get squeezed a lot, but you get what I'm saying. We want to get on the wave before it starts to break. Like I want to be like if you're a surfer, I want to be on the outside with the longboard catching the wave before it even gets to the short boarders. You know what I mean? Like that's the key. Is to get on these plays when they're up only 25% or 30%, and then we take them to 50% up. We take them to 100% up, 70% up. That's how you do it. So just some food for thought. I hope somebody learned something from this video. I really do. Focus on stocks. For these patterns, I find they work best on sub-dollar stocks. It's the harsh reality of it. They do. This afternoon pattern actually works really good on $1 stocks as well. But anything over if it's over $1.50 to $2, this pattern I really don't like to look for it. I look for these on the smaller stocks, like under $1.50 ideal. Um, and then for the after hours gap, 4 a.m. gap, under 50 cents. Under 50 cents, ideal, ideal, ideal. Over 50 cents, I haven't had the best. I mean, I do have good trades on them. Don't get me wrong, but um, I just find that the smaller ones for that 4 a.m. gap work really well, especially if they have a gap to fill in a good looking daily chart. To end this video off, we'll look at EDBL. I actually took this one overnight. It does not have a gap to fill though, so I didn't go that heavy. Although just something about this stock, I've seen it. I've made money on it in the past. I'm pretty sure. Let's see. I'm pretty sure I've gapped this thing before in the past. Let's look. EDBL. Oh, looks like I lost some money on it. I tried it. But that's when I was really trying to dial in on this strategy. See, this one was really trading light volume at the time. But anyways, my thesis on this, like I remember this day recently we gapped. We typically like the gap, big gap. So I'm looking for where's the stock trading at? It's trading somewhere around here basically. So I'm looking really just for this resistance up here to get kind of blown past and we shoot up into that 43 area, 42 area. I don't know how likely it is to happen. I think we can at least go up and test this resistance at 31 one more time. But the thing about this play is it's just good risk to reward for me. I know if this play can heat up, it was trading the most volume after hours. I just There's just something about it. I love how it went. What really got me is the way it went sideways, honestly. The way it consolidated and held up so strong after hours like that sideways, I wouldn't be surprised to see like a huge move up randomly. It's sometimes the ones that you don't expect that make these huge moves. But um, but yeah, we'll end the video there. I hope you guys learned something for sure. If you have any questions, comment below, man. I'll try to answer them the best I can. I'm going to be starting a private Discord group and just trading live in there whenever I can. And I just kind of want to build a little bit of a community. I'm currently in a community right now, although I kind of want to build something better. I want to build something where people are actually learning and learning a lot more just hands-on with some more like a lot of live trading because I'm one I'm in right now. They don't do too much live actual trading, like placing trades, and that is so helpful in my opinion, just to see how a trader thinks and see how they cut losses, see how they take winners, see how they hold winners, etc. It's very important. But thanks everybody for watching. Hope you tune into the next one and hit the like button, smash the subscribe. Look forward to making more videos. Take care.